I love what you say about who is Robinhood's customers, and you make the distinction that everybody going long GameStop and right now frantically trying to sell are not really Robinhood's customers. Who is?
Well, it's the people who are sending money to them, paying for order flow, the people that actually generate Robinhood's revenue line. And you know that we've talked about this before, the difference between cheap and free. Cheap is great because it means you're paying less and getting a service. But free raises all sorts of questions. When the old joke is, if it's free, then you're the product, not the customer. And it's pretty clear that the Robinhood traders were there for free trades, not understanding the platform, not understanding that essentially Robinhood is a counterparty to them.
I sound like Arthur Levitt in the legendary work he did moving from a quarter and 3/8 trade down to decimals. But Barry Ritholtz, has anyone quantified what free is in terms of that order flow? What are we really paying when we buy, say, 100 shares of Amazon this afternoon?
So you have to look at who your broker is and how they make money. There have been a number of articles, for example, about Schwab, and Schwab doesn't hide this fact. They're pretty transparent about it. They make money on the float. So if you're getting free trades at Schwab and you have a pile of cash sitting there, they're capturing a little bit of float. It's harder for them to do when rates are as low as they are, but that's their model. The way a platform like Robinhood works is they're selling order flow. But by the way, all of this is perfectly legal, perfectly legitimate. It's disclosed, on page 37 of the fine print. But understand that when you are not the direct client, when you're the user, it's a different relationship than, say, a hedge fund and a prime broker, where they're paying for services and they could demand a certain level of service. And when it's free, well, what can you demand?
Barry, I want to rip up the script here. Maybe this is your next Bloomberg Opinion essay. I'll let you do better than I'm going to do right now. It's not only the names involved in the debate of the last week, but it's the names not involved. I believe we haven't heard about Schwab. We haven't heard about Fidelity, and maybe there's other names that you know better than me. What are the people we haven't heard about doing or not doing that we see within this notoriety of Robinhood?
Well, first of all, if you're a trader at Fidelity or Schwab or Vanguard or any of the bigger platforms, one of the things you really don't have to worry about is a trade not being allowed because the brokerage doesn't have sufficient capital and can't take a risk. All this chatter about, I can't believe who got rescued, and when they froze the purchases on the platform, nobody was getting rescued. That's just the regulations they had to follow. They did not have enough capital to allow tens of thousands of people to buy hundreds of millions or even billions of dollars in whatever it was, GameStop, AMC, whatever was shooting upwards. And to their credit, to the management of Robinhood's credit, a week ago, they got a $1 billion line of credit from JP Morgan and Goldman Sachs. And this week they added another 2.4 billion in capital. So they're becoming better capitalized, but it's clear that they were unprepared to deal with the surge of buying and the risk to their platform that these people either don't make a payment or the stock collapses, or everybody involved in the ownership chain of an equity has risk that before settlement, the stock collapses and they don't get paid.
Barry, GameStop slips away. I'm going to just say, folks, it's an elegant chart from early this morning, 6 a.m., of migrating to a set of lower highs as we move on. Barry Ritholtz, tell us about the remorse of the bid slipping away. All of us, and trust me, folks, I've enjoyed this. You make a trade, you're brilliant, and all of a sudden the bid slips away. How do you counteract that in the trenches of your emotions?
So there's a very simple concept known as regret minimization that as a trader or an investor has to be somewhere in the back of your mind. And this was a Bloomberg column I wrote. in 2017 when Bitcoin had run up to about 19,000 at the time. And specifically, you have to look at this not as, is this going to go up or down, but hey, if I don't sell here and it goes down, how do I feel versus if I do sell here and it keeps going up? And it's not about maximizing your performance or generating the highest possible return. It's about, what am I going to do that I'm not going to regret for the rest of my life? If you're a person who's making, a reasonable living of $50,000 or $100,000 a year, and suddenly you're sitting on a $10 or a $20 million windfall, that's a life-changing amount of money. That pays the mortgage off, your retirement, the kids' college. And so at a certain point, you have to decide, hey, am I going to continue to have fun with this on the possibility that it goes to who knows where? Or do you make a decision? Do you ring the bell and make your life satisfaction that much better, and make the lives of your family and children better for the rest of the next 3 or 4 decades?